Point one, gold is also at peak valuation. Point one. Point two, silver's volatility is so large that the return doesn't justify.
Moving to gold and silver, there have been reports of rising industrial demand for silver in sectors such as the EV space, and the expectation is that silver prices could see a significant spike. What's your view on increasing allocation to both gold and silver at this point in time, especially given the equity valuations in some parts?
Gold valuation, because there is no P, because P is infinite there, because there is no earning, right? So people don't calculate, right? It's a zero P investment, right? Unless you're going to have ornamental value or you're buying a sovereign gold bond to get the 2.5% yield. Then there is a P, which is also 50P, right? Earning is X divided by 2. So 50 years, 40 years is the P, all right? So point one, gold is also at peak valuation. Point one. Point two, silver's volatility is so large that the return doesn't justify.
Okay.
Nifty's standard deviation is 18 or 19 for the last 1 year. Silver's standard deviation is close to 42% for the same period. Now, if something which has 2 times more the risk gives me 2% more return, then it's not even an asset class worth considering on a risk-reward basis.
Oh, fair enough. On a broader level, if we look at the composition of investors today, India's retail investors, with 60% of demat account holders below 40 years of age, if I'm not wrong, and the geographies from where new money for investing is really coming in. What, according to you, has changed in terms of how investing is being done by today's retail investor?
One thing which is a nuance I understood after doing a small little survey amongst people when I do an event, especially not the really rich, ultra rich or the HNI and ultra HNI, is to understand from the person. One thing which I realized is SIP's number, which is 25,000 crores, is the person there and the person in derivatives is one and the same, at least 8 out of 10 times.
Right.
So the great news is the guy who's betting in derivative is also respecting discipline and doing SIP.
Right.
The inference of the market would be very different if these are different 100 set of people and this is 100 set of different people. It is different set of monies of the same person in 8 out of the 10 cases. That's the good news. Right. That means people are respecting both adrenal and discipline at the same time. Second, I think tier 2 has now realized that beating inflation is very critical, especially because Indian government was funded by Indian households.
Right.
India has been a fiscal deficit country. Foreigner never bought Indian bonds. So what option did India have? To borrow money from the Indian households. So India now is self-sufficient with the kind of foreign exchange reserves and the borrowing rates. Now foreigners also have started buying Indian bonds first time in the last 1 year. So now that's why the ministry has said that in the new tax regime, we will not force you to invest where we want you to invest.
Right.
PPF, EPF, small savings, all those are no more a compulsion. That is because India today can permit its household to not put 80% of its money, financial assets into debt instruments. That's one second change. And that's where a tier 2 who's not getting a tax benefit on PPF, EPF in the new tax regime is moving towards equity, and rightly so.